Welcome to today's session. Here's a Facebook chart. What you'll see on this chart, if you look closely, is you'll see these long yellow bars. These are termed the Hawkeye Widebar, and their purpose is they demonstrate a large increase in last price bar volatility. And what that means to you as a trader is we may have potential for short-term price instability. This gives you the opportunity to potentially avoid entries that may not be high probability trades, which of course is the purpose of entry. So our trading edge with this is we avoid an entry that may give you a low probability of success and also indicates when it is the right time to enter such trades. And the bottom line rule is if we have a close above the wide bar, then we can enter if it's a long trade, and vice versa, of course, if it's short. We also may use these in short-term out-of-the-money credit spreads as an entry signal. So here's an ANF chart, and you'll see here that we've got 3 wide bars on this. And remember, the purpose is to avoid that low probability entry. If we'd entered this on this bar here, you'll see that it didn't close below that bar, so we would have entered prematurely, eventually got stopped out around this level, a reasonably poor loss. And likewise on this, we could have entered long on this, got very excited about this long bar here, but again, we never got into this really, to this bar here. And at that stage, we're still in uptrend, but not a convincing entry. Urban's an even better example. We see here, we see a short entry, we waited, we saw the wide bar, waited till the next day, and we could pick up a scalping trade with there's a long wide bar, and you'll see it never actually closed above that until this bar here, which was the day pre-earnings, and there was the wide bar there was the close above it. That was a nice trade there, so we were kept out of this one, kept out of this one. This was the trade we entered. We had a short potential trade there, and we wouldn't have entered it until it was at that stage there. That's where the close is below the wide bar, and that's a really very nice trade indeed, taking us all the way down here. And again, we wouldn't have entered here. We would have already taken this off the table. We've got another wide bar here, which we haven't entered. We're still in congestion. Now, if we're using this for credit spreads, we could have entered a bear call spread here, and we would have been absolutely fine. Below this, we could have entered a bull put spread. Below this, we could have entered a bull put spread. Above this, with this being a wide bar to the downside, we could have entered a bear call. Likewise with this, and likewise with this. And we could have entered a bull put here. Now that would be 1, 2, 3, 4, 5, 6, 7 successful credit spread trades. That's why this particular bar is a powerful signal. I trust that's got you excited. Those of you who are using Hawkeye already, if you're not sure of setup, then let us know. We'll see you again soon.